Welcome to this week's Forex forecast for the week ending February 3rd, 2023. My name is Justin Bennett with Daily Price Action. Hope you guys are having a great weekend so far. So let's go ahead and jump right into the charts, looking first at the EURUSD, which has been relatively sideways here over the past couple of weeks. Yes, we still have an uptrend for this pair. So it does still favor bulls. However, again, we have some very tight ranges developing here, which has made trading the pair relatively difficult and really unfavorable, just because it's unclear whether we get a breakdown from this level and this becomes a fake out up here and we get to move lower, or if we are going to see that continuation up toward 111.20. So these highs and lows from back here that I've talked about. So you can see that 111.20 was support. Right back here, we got the breakdown and it flipped to resistance. Now, I'm still monitoring the trend line on the weekly time frame off of that late 2016 low. So you can see if we go back here, you can see that off of this low back here, we have this trend line that extends across a couple of lows, including this one here and also this one right before the breakdown. And you can see where the EURUSD is kind of struggling at that area here, so far this month. Okay, so that's going to be one to watch as well. But ultimately, what I think this is going to come down to is on the daily time frame, this horizontal area right around 1.085. Okay, this is going to be the hinge for the EURUSD in the sense that if we get a daily close back below this, okay, and especially below this trend line area down here, okay, this week, then that would mean that this up here and really this entire move is a fake out, and we could get that move back down here toward 1.048. And alternatively, if we see the EURUSD stay above this, okay, and start to break some of these highs from last week, then we could get that move up toward 111.20, which is going to be that confluence of resistance. Okay, so kind of unclear right now. The uptrend is intact, so you have to be careful trying to short this. In fact, I would not try to short this without a close at least below this level right down here. Okay, this trend line, if we got a break there and especially below 1.07, then that would be a clear breakdown. But until that time, the uptrend here is intact. So again, it does favor bulls for now, but like I said, very unfavorable conditions with the EURUSD, really just going sideways here for the past couple of weeks. So next up, let's talk about the pound here, which is also still very sideways, although I love the key levels that have developed over the past, year or so, going back here to these highs from last year. So the pound is still very sideways below that level, right around 1.245. This is still the level to break. Okay, we can see that it has served as resistance here for the past week or so, based on this high from back here in December. Okay, so this is going to be the level to get above on a daily closing basis. Do that, and I think we would see that move up here toward about 1.267 or so, based on this swing high from back here in June. Okay, so that would be next if we get the daily close above 1.245. So very clear cut on the upside, as far as what we're looking for from a bullish standpoint. As I've mentioned recently, though, this trend line down here off of this closing price, okay, is kind of the level to hold for bulls. If we were to see a rotation lower, a close back below this level right here at 1.23, which is going to be support this week, if we were to see a close below that and also this trend line, then that could spell a bearish reversal here for the pound, back here toward this level and potentially even this low down here. Okay, and one last thing too before we move on, just so you know, a trend line like this off of a closing price on a higher time frame is very valid. Okay, you can draw them like this, you can draw them from the wicks. The reason this is drawn from the closing price is because of the volatility we saw on this candle. Okay, this candle saw incredible volatility. So what happens is if you draw this from the wick, you're going to get very different prices across brokers. Okay, and technical analysis is self-fulfilling, right? So we want this level to be as accurate on this broker as well as 10 other brokers. So the way to do that is to use the closing price instead of the wick. Okay, because the closing price is going to be much more normalized across brokers than this wick down here. The price of this wick is going to vary drastically across brokers, whereas this price right here, the closing price, is going to be much more normalized. So next up, I want to talk about the dollar yen. This forecast would not be complete without talking about this pair, because to me, this is kind of the best technical picture right now in the Forex market. While everything else is kind of sideways and choppy and the technicals are not really, A+, what I would call, this right here from the dollar yen is textbook. Okay, we have this descending channel, which this is a little bit different than what I showed last week. I did have a trend line off of this closing price from up here, but I think that this descending channel kind of captures the picture here for the dollar yen much better. So going forward, the same level here, 130.60, this is the same level that we've talked about that buyers have to get back above on a daily closing basis. Okay, it is still resistance here for the dollar yen, but if we were to see a close above this, a daily close above it, then that would open up 134.50. All right, very clear resistance ahead on a breakout above this area. And alternatively, we have a short-term trend line that's developed here on the 4-hour time frame. So if we go in here, you can see that off of this low, right down here, we've got this short-term trend line. Okay, so you can see that basically this level up here, this resistance and this support, this is a terminal pattern for the dollar yen. It is going to have to make a decision early next week. Okay, really, I mean, the first 24 hours of next week, we're going to have to either get a break below this area for that move down toward 126.70, you know, potentially take out this low back here, or we get the breakout higher and the close above 130.60. Remember, that's going to be the level that has to break in order to expose 134.40, maybe 134.50. Okay, so the reason you see this candle up here closing above it is because we're looking at the 4-hour time frame and this channel is being respected on a daily closing basis. Okay, so if we get the break lower though, guys, what I'm still monitoring is this weekly trend line. Okay, so you can see that on the weekly chart, we have this trend line that goes back to the start of 2021. All right, so this would be my area I'd be watching if we get the break lower. So 126.70 first, below that we've got 125. Okay, and if we get the break higher, again, a close above 130.60 opens up that 134.50 area. Next up, we have the Australian dollar, which is playing out really well, technically speaking. So back here, when we got this break above this range high, okay, this previous range high, we got the close above on this candle. We saw a retest here, even a retest on this candle right here, you know, after hitting our target at 70.30. So on this breakout, I wrote that 70.30 was our target. We got that right here. We got the pullback right here into support and then move higher. And also the close above this level at 70.30, you can see on this candle right here. So we got the close above, retest as support, and then that move up toward 71.30, which was our next target. That was the next resistance above that. And sure enough, we saw the Australian dollar kind of struggle there based on this swing high. Okay, so you know, going forward in the week ahead, we could see a slight pullback here early week based on this resistance, but this is going to be the level to get above on a daily closing basis. Do that, and this level up here at 72.60 comes into play. Okay, now the one thing I want to talk about here with the Australian dollar is we have 2 trading days before the end of the month. Okay, and if we look at the monthly time frame, you can see that this is our 70.30 level right through here. So you can see support back here, support, we got the breakdown, resistance, resistance, support, support, and resistance. Now currently the Australian dollar is trading above 70.30, but again, we do still have 2 days to go before the month ends. So this is going to be a potentially significant monthly close for the Australian dollar, because what you'll notice here is that once this level was established back here, you can see that every time we got to close above or below this level, it became a significant development in the trend. Okay, in other words, we got the close below right here, we got the retest here, another retest here, and then we got the sell-off. Notice back here, we got the close above, we got the retest, and then we got the rally. Okay, back here, we got the close below, we got the retest, and we got the sell-off. So if this level continues to hold as a pivot here on the monthly time frame for the Australian dollar, if we get a monthly close above 70.30, okay, if we close anywhere up here, then this level becomes support, and we could be looking at a move, you know, back here towards some of these highs around 75.30, 75.40, okay, and potentially even this trend line all the way up here over the coming months. So this could be a very significant development in 2023 in the next 2 trading days. But once again, it's going to come down to, can the Australian dollar hold above this level right here on a monthly closing basis, which is on Tuesday. Okay, so this is going to be one to watch within the first 48 hours of the new week. If the Australian dollar closes above this level, then I do think we could see a continuation of that rally. If it closes below, then we could be looking at a sell-off back down here toward about 68.70 or so. And last but not least, I want to talk about gold here. This is XAUUSD. So you can see that back here for gold, I mean, obviously the market's been in an uptrend here recently, making higher highs and higher lows. And last week it did test this level right around 1920. This is going to be the must hold for bulls going forward, because you can see that right back here in the first half of 2022, this was a pivot for gold. So we saw the market hold above it right through here as support. All right, we got the breakdown on this candle, and then it became resistance. Okay, so right now you can see that what's happened is gold found resistance right here. We got the close above, and it flipped to support. Okay, so this is going to be the must hold for bulls. Furthermore, we have a potential trend line here off of this low. Down here, we've got all of these lows through here. So this is kind of a confluence of support here at 1920 for gold. This is the must hold level for bulls. If we were to see a daily close below that, that would signal weakness and open up levels like 1876 and potentially even, some of these highs through here right around 1800, maybe just above that. Okay, but as long as gold is trading above this level here, the uptrend is intact, it looks healthy, and we could get that move up here toward 2000, which is a psychological number. And it's also this little pivot back here where we got the bearish engulfing candle. Okay, right back here, we got the close below, it became resistance, and resistance once again here on this candle. Okay, so as long as gold is above 1920 on a daily closing basis, the uptrend is intact, it looks healthy, and we could see 2000. Okay, as long as this level through here holds. But again, if we get the breakdown, we could be looking at a pullback down here toward this pivot for gold. Okay, right there, right around like 1876 or so. Okay, so that's kind of what I'm watching here this week. Can gold stay above 1920? If so, we're looking at a continuation of this rally. If not, and it closes below, then we're looking at a potential pullback here into some support. All right, so that's it for this week's forecast. I hope you found it helpful. And if you are not a member of Daily Price Action yet, be sure to head over to the website, click that Join Today button, and you'll see all the details on how to join. And for the members, I will see you all in the Discord community. As always, if you have questions, be sure to ask in there, and I will get back to you as soon as possible. Enjoy the rest of your weekend and have a great week trading. I will talk to you guys again next week.